Uh, Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to consider the financial earnings report of the pharmaceutical giant Merck. This is a company which has its medicinal products available across the world. In the prior session, we looked at the results of another medical devices supplier provider, which was Medtronic. And in this series, we are continuing to take a look on these pharma companies one by one. So for today's session, we are going to consider the Merck's pharma results and see how it has been doing for last couple of quarters, the whole year in particular, and what are its forward guidance for the upcoming quarters. And yeah, we first see its Q4's earnings report, which was released on February 1st, 2024. And if we look at the fine print of the result, you will see that for the last quarter, the company didn't really earn any money in particular. And that was because there was a one-time charge related to the its collaboration with Daiichi Sankyo, and that almost wiped out its all of the profit of the quarter. But that is a one-time case, and as we move forward, the company is expecting to make not only profit for the quarter but for the whole year. In the 2024, it expects to earn more than what it earned in 2023. Its guidance range has been revised upward, and for the full year 2024, it expects the revenues to be in tune of US dollar 63 to 64, with earnings to be in the range of US dollar 8.5 billion. And this is uh, quite a lot of growth if we compare it to the prior year's earnings. And for the current fiscal year, the EPS was not really good. It is at the lower end, but for the next quarter, the company is expecting its capital investment, its earlier product development initiatives to finally pay off, as it is expecting the rollout of its key products along with the approval of some key medicines, which is going to push the demand higher and generate more revenues for the Merck. Now we will look in details of various segments the company operates in. The three key segments have been listed here: cardiometabolic, vaccines, and oncology. And if we look at the outlook which the company has provided, it has mostly been revised on the higher side, with the oncology now expected to contribute more than US dollar 20 billion in the revenues, and cardiometabolic segment expected to contribute nearly US dollar 15 billion. This is also been revised on the higher side, and immunology has not been defined in numbers, but it is expected to be in multi-billion. And it has also listed additional opportunities in late phase pipeline progress programs in vaccines, neurosciences, HIV, and animal health. early phase programs, and also it is relying on additional potential for business development. If we look at the fourth quarter's numbers, the fourth quarter 2023 brought in $14.6 billion in revenues for the company from its worldwide sales, of which the human health derived revenue stood at $13.1 billion, whereas animal health contributed $1.3 billion, and both these segments have been growing. The human health segment has been growing much faster in comparison to the animal health. And if you look at the full year worldwide revenues, then there is growth of 1%, and the figure now stood at $16.1 billion. This is expected to grow further to 63 to 64 billion dollars in the next financial year. Pardon me. And why the company is expecting the growth in coming year is because of these key factors which are likely to contribute to higher sales and resultantly higher revenues and net profit for the company. The K-Truda sales have already shown a remarkable increase of 22%, and it is likely to remain on this path. And is a breakthrough medicinal product, and it is likely to stay in demand for a while. And there have also been encouraging signs in treating of certain patients with NSCLC, and that is also generating positive feedback for the company. And if we consider the oncology portfolio of the company, the Linparza, Lenvima, and Valirage. Of course, it is always difficult to pronounce the medicinal products names right. So I am also facing the same difficulty here. But the key thing to take note of is that all three products have shown consistent growth for last 3 quarters of 3 different years. So you can even consider this as the annual growth, and for all these 3 years we have seen that there has been substantial growth, and that means the more and more patients and doctors across the world are trusting the Merck's medicines to provide them relief, and that has contributed to this higher growth for these key medicines which are being used for cancer treatments. Vaccines have also contributed well for the company's portfolio. The HPV vaccines, in particular, Gardasil and Gardasil 9, these have been bringing in almost close to $2 billion for the fourth quarter of 2023. There is a decline in bright year for 3%, and that is being compensated by the strong growth in other segments, as we are seeing in overall scenario there has been growth for the company's product and revenues. Now, if we summarize these results, and in it you can see that the total sales have increased 7%, and the gross margin is at lower side this time around. There has been higher expenses to generate these slightly higher income, and that is pointing to the need for the Merck to make its operations more efficient, more effective. But that's for another quarter. The company is, of course, going to take note of these and plan accordingly in coming quarters. For the tax rate, you will see that there is a 114.2% charge, and that has pulled its EPS to just US dollar 0.03, and this has totally taken away all its revenues of the quarter. It's a net profit of the quarter, but there is going to be a one-time charge, and in the coming quarter, we can expect the company to again have similar number as it has been seen in the ballpark of US dollar 1.62, US dollar 1.7 billion, around this number, and in coming quarters we can expect it to even get close to and eventually climb above US dollar 2 billion mark. For the fiscal year 2024, we have the official guidance provided by the Merck, and it is expecting the revenue growth with the gross margin rate likely to be in the ballpark of 80%. The tax rate is likely to be around 15 percentage point, which is going to result in the EPS of around $8.5 per share. So far, so good for the company. I feel that a pharma sector company is always a defensive bet. It is going to deliver value for you. Overall scenario or is also stable. So in this kind of environment, if you are someone who likes to have regular dividends and decent growth, of course you can't really expect too fast growth in the pharma segment. That is not really the nature of the market, nature of the business space in which these companies operate, and but if you are looking for a defensive bet which is going to perform well regardless of the macroeconomic scenario, then I think Merck is a good bet to rely on and expect it to deliver profit and growth for you in coming quarters, coming years. And that is the view of the market, as well as we have seen strong rally in its shares in recent past, and that is where we are now headed. We will consider its stock price performance in recent past to assess if there are opportunities for us to trade and invest. If we consider the short term price formation after the release of its earnings on the 1st of February, it has seen small rally of around 5 percentage point, and after that it consolidated those gains to eventually rise again and make a new swing high just little above 130. But after that it has been going sideways, and in today's session it is decelerating from the higher levels, and I feel that we will have to now allow it time for a couple of days to make a fresh assessment of how it goes, because after having new peak it is now in a retracement zone, and how long this retracement is going to go will be known only by passage of time. So for that we will have to wait. We will allow the time to make the decision for us if the mark holds the price level of around 127, 128, and it doesn't really decline much and continues to consolidate over next 4 5 trading sessions. Then maybe eventually, as and when it starts to show the signs of upside momentum, we can get involved. But for the time being, as it is retreating from this new peak, we will have to be cautious and allow it to stabilize and the long trade. But right now, it is seemingly in a no trading zone in the very short run. From the medium term perspective, the things are also poised on the upside. But as I said, while assessing the short term scenario, the similar thing can be said about the long term as well. It has made a new peak and it is retreating from that new peak. So we can't really say if it is going to give up all its recent gains or if it is going to simply consolidate while holding on to most of its gains. So for that, the only thing we can do is allow it to consolidate, and then maybe in a couple of weeks we can make a fresh assessment of whether to jump in and go for a long trade or whether to change our view and ride the stock lower. That will be decided in coming weeks. But for that, we need to be patient and allow it to consolidate further. And if it continues to make higher highs and higher lows, then we can go for a long trade. And if it reverses course and starts making lower lows and lower highs, then of course we can also change our assessment from bullish to bearish and start looking for the opportunities to go short while adapting a sell on rally approach. From the longer term perspective, we will have to rely on the weekly charting where each week has been defined as the candle period, and in it you can see that the mark has continuously rallied from around 100 to 130, and it is only last week it made a new peak, and from there on it has slightly declined around 2 percentage point, which is not a big deal. If it consolidates further, then also it is going to still remain in a bullish zone where it has been making higher highs and higher lows for a while now. For last couple of years, it has been continuously rising. In 2020 and 21, it spent time, long time, in a consolidation phase around 70 to 80, and after that, it started to make fresh highs, and it has continued to make that bullish formation even after this rally. And as the current phase suggests here, we will be taking undue risk if we go for a long trade at the current levels. I'm not saying it is not bullish, it remains bullish, it is bullish, and it is likely to remain bullish. But the only thing is, we will have to adopt a cautious stance and go for the newer trade on the long side after due correction and consolidation. So, whether your view is short term, medium term, or long term, the mark stock is the one to buy. It is the stock to adopt a buy on dips approach and is likely to bring you good returns. But then for that, the timing also going to be crucial as it is on this new peak. I feel we will have to go in a cautious manner, and then eventually we can expect it to deliver good opportunities for us to trade and invest. So that's all from my side for today's session, in which we consider the pharmaceutical giant Merck's quarterly earnings and its stock price performance over last few days, few weeks, and also few months to few years. So looking at all this, we get the idea that the stock has been bullish for last couple of years, and it is likely to remain so in coming quarters as well. So all we have to do is keep looking for the opportunities to go long. That's all from my side. If you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. If you have found the session informative and useful for your trading purpose, do write to me in the feedback and like and subscribe to the channel. You will have equally informative sessions hosted by me and other hosts as well. That's all from my side for today's session. Now it's time to say goodbye. See you next time around.